Hello, and I'm super excited to chat to you about what the hell is going on in the markets right now. So, as I just let you sort of connect in, I'm going to be talking about the crazy ups and mostly downs that have been going on in the stock markets around the world in this last week. What's been causing it, what's been going on with the markets due to coronavirus, and what should we be doing about this? So the most important first thing is like going, whoa, it can feel super scary. It can feel super crazy, but really important first lesson of the Hitchhiker's Guide to the Universe is do not panic. Panic does not serve anybody. There's enough of that going on. And when it comes to your financial well-being, you most certainly don't want to be panicking. So it is really great that we can just have this time where I want to take you through a few key pointers. So, is the coronavirus a big deal for the markets? What's been going on? What about oil? What should we be doing? What could you be doing? Should you be selling out? Should you be getting in? Should you be running and hiding? Well, I do know you shouldn't be stocking toilet paper, but hey, that's a whole different topic, and that's not what we are here for. So we are here about what is the way that you can really give your money leadership? How do you understand what is the wealthy path to do in real turbulent times like this? And boy, are the stock markets around the world having a super wild time. The corona outbreak has certainly inflicted some significant short-term damage on stocks, but it's really important to understand that if you invested in the market, if you don't sell, it's all just paper theoretical prices. So it's really important that you start managing how you view this. So yeah, right now there's some big interesting dips we've just seen. So it's so great to see you connecting in. We're talking about what's happening with the markets. So since the news of the outbreak of the coronavirus started around about January the 7th, major global indices, remember indices are the things that tell us what's happening on the stock markets, these indexes are down between 12% and some 21%. Yet those are big, what we call corrections in the stock market. And of course, this week's correction has been historic. It's going to go down in history as one of these big, like, whoa, remember, the week of March 10th, 2020, when the markets just went crazy. The Dow dropped a record over 2,000 points, and the S&P 500, that's the index that tracks the top 500 companies in the US, lost 7% in one day just on Monday. And this actually triggered the market circuit breaker. So basically, they stopped trading on that market, and trading was paused for 15 minutes for the first time since the 2008 credit crisis correction. And that, what they do is they just stop the trading to let everybody just calm the hell down and see what's going on. So, I really understand how when we're investors during these times, it can feel quite scary. And it can be really easy for our limbic system, our emotional, fear-based system to be triggered. And then we wonder, what should we be doing? Should we be leaping off a cliff like the lemmings? Should we just be hiding under a pillow? What the hell should we be doing? I really understand it can be difficult, and that's why I wanted to jump on and have this conversation with you. But it's exactly times like this where we've got to stay rational. We've got to stay calm. We've also got to trust in our strategy and our investment systems, and why it's so important we have an investing strategy. And we've really got to understand that these corrections are always temporary, even though it might feel with the drama of the headlines of the newspapers around us that we're heading to some sort of Armageddon. We are absolutely not. In the long run, markets are amazing self-correcting value representations. Remember, when we are investing via the stock market, we are buying shares in amazing companies around the world using the extraordinary benefit of the technology, the internet, to be able to do that at low cost, instant speed, high liquidity. And so it's one of the most extraordinary investment mechanisms we can be using to grow our wealth, owning shares of amazing companies around the world. And when we do that through something like through index trackers, they themselves are naturally auto-correcting that the better companies rise up and poor performing companies drop out of the index. So we've got to remember that that core strategy we apply of a consistent index tracker based portfolio investment strategy is extraordinarily efficient and represents value. But in the short term, the stock markets are crazy, hormonal, emotionally driven monsters. They're a bit like bull elephants when they go into must, where these pheromones just drive them and they don't eat, they don't drink, all they do is stomp around through the bushveld. And it's just, that's what happens with the markets in the short term. So what's really important is that we don't get sucked into that we keep our own emotional EQ turned up and we keep ourselves in check. So what's been going on? The biggest drivers behind the market panic this last week are two things. It's the spread of the coronavirus, but it's also been about oil. And yes, the coronavirus is a big deal. I'm not here to talk about, what is or isn't going on with the coronavirus. We will all yet to see what really comes about. And yes, oil has fallen off a cliff, the price of oil, and this will impact companies around the world. So the oil price has been affected because Saudi Arabia is just upping its production to spite the Russian President Vladimir Putin for not agreeing to oil output cuts. So that's had a big price. So we've got equities being impacted by coronavirus, market going crazy. We've got commodities, specifically oil, being impacted by some political shenanigans going on there. But it's super important to understand that none of these problems even come close to the type of potential, financial industry or world-ending Armageddon that the credit crisis actually represented in 2008. And look, we've all emerged from that. And so, yes, the spread of the coronavirus is serious. Confirmed cases are rising and lives are being lost. And this is going to impact many areas of life. For example, events are being cancelled. I just, heard this morning that a big event that I was going to be speaking at in the summer that I was really looking forward to has been postponed and been cancelled. In other areas, people are working more remotely. Some whole areas are being quarantined. So naturally, consumer spending is going to shift. There's been crazy buying and selling going on, and corporate profits are going to be impacted. And it's very likely that this is going to specifically impact the hospitality and the airline industries. But none of us actually know specifically what's going to come out in the end. So we might see some bankruptcies and we'll see some consolidation. So is it going to be painful? Well, yes. But it doesn't have to be painful for our financial well-being. And this is what's super important. It's what we do in times like this determines whether we get clobbered or not. Now, my personal stock investing portfolio is in the millions. And can I tell you, with those big ups and downs, I did what I tell everybody else not to do. I went and looked in because actually I was going a shopping spree. And it can be a bit nerve-wracking when you see literally thousands, lost, gained. But we understand it's a paper, it's a theoretical loss. It's only a loss if you do something stupid like sell. And that is super important. So I'm not worried at all. In fact, I'm actually delighted. I'm really excited about the opportunity that right now this massive correction in the markets created for those of us who are savvy, can stay calm and have a good investment strategy in place. And in fact, I've been going on a shopping spree. Now I don't predict which companies are going to benefit from this or which ones are going to fall out. What I use are index trackers, and I use a consistent strategy. So I buy the market. I buy this self-correcting system so that I know that I'm not trying to be clever. I'm just using my regular investing strategy, but I've just been topping up on it because we're having this fantastic, gigantic sale. And, I've now been investing for 25 plus years, and I've been in markets, and this has given me a real ability to see through the drama, the crazy headlines. I've been through the 2000 dip, the 2008 dip, the 98 crash, and now we've got this fabulous sale going on now. And I'm pretty damn certain that in 18 months from now, we are going to be at or beyond where we were a few weeks ago and reaching new all-time highs. So it's really important for us to remember what are the things that are in our control. What's in our control is firstly consistency. I call these our 3 C's of control. The first, consistency, is we need to keep being consistent with our investment strategy. We need to stick with our regular investing. The regular investing using cost averaging is the thing that lets us benefit from these corrections without letting our emotions come into play. So you must be consistent. You must also be consistent with your strategy. And this is why it's super important that you have a portfolio designed, a multi-asset class portfolio, that is your investment portfolio. And then you select the index tracker funds that represent those, and that just becomes your recipe. It literally is a cookie cutter recipe that you just consistently apply. So super important. Contributions is your second C. You must be consistent with just doing regular contributions into your investment plan. That's what we can control. And times like this, seeing, can you even up your contributions over this really volatile period? Because you're going to be getting more for your money when everybody else is losing their marbles. You're staying consistent, going, woohoo, sale time. And then the third C that we can control is our costs. And that's why I love index trackers and having this consistency of investment, so you keep your investment costs down. Those are really the only 3 C's that we can control in our investing environment. So let's talk about these different asset classes. We've got the equity market that we're seeing going crazy with Corona, with these corrections. We've seen commodities, so that's another asset class with oils being impacted. So what's going on with 2 other asset classes, cryptos and gold? So in addition, so you might be wondering, well, why haven't cryptos? Well, actually, let's start with gold. Why hasn't gold gone even higher? Gold's been on an extraordinary run for about the last 6 months as volatility in the market sort of gained. Now, it's super important to understand that gold zigs when the equity market zags. Gold is a preserver of wealth. It's not a creator of wealth. So gold doesn't grow in value. It's not something that, like a business, that now it can grow because of the company's expanded or grown in value. It doesn't generate any income. It doesn't produce dividends or like residential property or property develop yields. It's just considered a separate asset class from all other assets that's considered a preserver of wealth. So I'm still very bullish on gold. I think it's got a lot further way to go. And so as we see this volatility, gold is going to be going up. And I believe everybody should, every well-designed portfolio should have an element of physical gold in it. And again, you can own physical gold through index trackers and being that wealth preserver. It's also just something that really gives solidity to a portfolio, especially in these very volatile times. So there we go. So that's gold. So what about cryptos and Bitcoin, which is seen as, again, an uncorrelated asset to equities, to properties, to commodities, to things like precious metals and gold specifically. And this is really one of the most prized attributes of Bitcoin and some of the blockchain currencies. It's seen that in general, these cryptocurrencies, but Bitcoin, they're what are called uncorrelated assets. So they don't give a hoot what is happening with Corona, with oil, with the stock market, the oil markets, because it's an uncorrelated asset class. So correlation means that if one asset class is having an up and down, another asset class will follow with that. So when you're designing your portfolio, you want a selection of uncorrelated assets, and this is what gives you balance and protection in your portfolio. So you might be going, well, hey, there's all this craziness going in the stock market. We're seeing oil doing all its stuff. Gold's been climbing. Why are cryptos down currently? And the Bitcoin price has been down in this last week, has also gone down about 9%. And the main fact is that for this recent Bitcoin drop is that there was a big scam. There was a big heist, and scammers managed to get hold of a big chunk of Bitcoin, and that can happen in anything. And there are scammers who manage to get hold of that, and they have been dumping Bitcoin and and just selling it off. So people have been selling their Bitcoin at lower prices to get hold of it, whereas this big amount have been dumped into the market so that they could get rid of their ill-gotten gains, or basically get cash out. So that's had this big dip. But there's a lot of indications and some exciting things happening. That thing that's happening this year, which is called the Bitcoin harvesting, where the number of Bitcoins available get halved, the halving. And also there's still a lot of amazing stuff happening in blockchain technology. So I'm still very bullish on the long-term developments and the opportunity with the crypto market, and believe that a well-designed portfolio should really consider having some of this new asset class, a small amount, because it's still very speculative and it's still early days, but it's certainly beneficial to have that in your portfolio, because again, it's different from these other asset classes. So the bottom line is, irrespective of what's going on in the world, one, you need to trust yourself and get in place a well-structured investment strategy that you stick to and you are consistent with that. And that strategy needs to include a well-diversified multi-asset portfolio. So you design your portfolio first, then you invest in your trackers in this consistent, regular way. And you just put that on autopilot. So you remove the emotional element from it. And having this diversified portfolio is what will shield you from this turmoil and crisis. And in fact, more than shield you, it will make you benefit from it while other people are doing silly knee-jerk things. And research has shown that asset allocation and great portfolio design counts for as much as 90% of the success of a portfolio's return, rather than what is the specific even stock or index tracker you choose in that. Because once you've chosen your asset class and the allocation diversification across these different asset classes and regional diversification, which index tracker you actually choose is irrelevant, because they track that sector and that asset class. So it's the design of your portfolio is the most important thing. And so really getting that in place is then when you can sit back and go, let's just enjoy the ride. So this is what you can really use to shield yourself. Now, traditionally, most financial advisors, the financial industry has put people into a very simple, what it would call a 60-40 portfolio. So basically, they've invested people in just two primary asset classes. One are equities. These are shares in people's company via mostly actively managed funds. And the second is property portfolio, is bonds. So 60% in equity, 40% in bonds, which are just loan instruments. And I'm just seeing what this current, super weird. Okay, going in there. Sorry, I just got a little bit distracted by some weird comment came in. So let me get back to where I was. Traditional financial sector has always invested in 40-60. 40% in bonds, 60% in equities. And that's been really as complex or as simple as portfolio has historic design has been between different asset classes, because that's really what the two sectors where it was easiest for the financial industry to get fees from. So they could get fees on investing in actively managed funds and in these loan instruments, these bonds. But it's not enough. It's not diversified enough. There's literally two asset classes in there, loan instruments in terms of bonds and equities. And you've already seen there's all these different asset classes. So whilst asset allocation might not seem like the sexiest topic to be talking about, like cryptos or pot stocks or options trading or structured notes, it's really important to understand that this is the foundation of the investment portfolio and getting that in place. So you need to go beyond some 60-40 investment portfolio that might be invested in via a financial advisor, and go to a far more diversified portfolio and really looking at getting between 6 and 8 different asset classes in your portfolio working for you. And now, I have now been studying this for a long time and come back to basically a core portfolio of 8 asset classes. What am I doing? There we go, 8. And they really are the broad 8 asset class portfolio design. 1 being equities, 2 being fixed income, bonds. Next one is real estate, property investing. The 4th is commodities, oil and industrial metals, those kind of things. The 5th is cryptos. 6th is precious metals, so that's your gold that we spoke about, but also looking at things like silver and palladium. The 7th is collectibles, so that would be outside of your index tracker kind of investing, but that is an asset class you can consider. And the 8th is cash. Cash is super important to have in your portfolio. And then you need to design a portfolio with the different percentages around that is designed to align to your specific life stage, what you're trying to invest in. So hopefully this little mini session has given you a really good opportunity to just go, okay, what have I got in place? What's my investment strategy? How am I managing my emotional responses to what's going on in the world? And am I actually taking advantage of this extraordinary happening right now by getting in place that portfolio if I don't already have that in place? Now, if you don't yet have a diversified asset allocation portfolio in place, you're not sure what percentages you should be having in those different asset classes, how to structure it, what are the different choices around what you should be investing in within those different asset classes, and also how to do it using index trackers and other passive investment mechanisms that you could do and set up so that you get implemented in an automated way, then I would love to invite you to consider joining me at a investor boot camp that I'm going to be holding in April. So with all that's been going on, I've decided to do a live boot camp. So live, it's in person, but it's also going to be streamed. So with everything that's going on with Corona, and I don't want to restrict your ability to not be able to attend it because you can't travel, you can also be able to join it via live stream, so from the convenience of your home. It's going to be a 3-day deep dive intensive of designing your portfolio, understanding the multi-asset class allocation design, and really getting it aligned to you, understanding what platforms to have open, how to invest in your different kind of tax mechanisms and implement that, and actually get this designed and implemented, including choosing your specific investments related to the portfolio and the online broker that you've got available to you. In addition to the 3-day live event, which is happening on the 17th, 18th, and 19th of April, there are also going to be 2 deep live pre-call sessions for you to get where you're going to get homework to get this all done. You know, I think there is such an extraordinary opportunity happening right now, and it's such an amazing opportunity to really get this aspect of your wealth house in order. And so if that feels like a fit for you, then just go to this link. I'm going to put a link in here, and that will take you to a page to get a lot more information on this, and it will just be an absolute joy for you to connect in. And let me just see, is that come through? Yep, you can go to that link. And Jilly, so good to see you here. And absolutely, Jilly, we've sorted it out so you can join the boot camp through live stream. And nobody needs to travel. Those who are locally can join in person. Those you can travel to be here, but we're going to be having an amazing time at that boot camp. So it feels like a fit for you. Absolutely jump on in. And really connecting in. So Julie says, thanks so much, and always bring sanity to chaos. I'll be there virtually. Can't wait. And just share this with others. Just look at your own portfolio. Keep calm. Remember those 3 C's. And really go, how am I going to make the most of this extraordinary opportunity that right now, how am I going to benefit from this massive sale in a structured way, using things that are self-correcting like index trackers, so that in 18 months time, in a year to 18 months time, we are absolutely high-fiving and going, yes, we kept our head, we kept consistent, we focused on our wealth and not on some sort of short-term panic, and we made the best out of this amazing opportunity, and realizing that life is always full of surprises. And when we have a great investment structure and plan in place, that's how we ride life's inevitable storms that will come along. Right now it's oil and Corona, and in 10 years' time will be something else. But this, and I'm so excited to be able to share this with you at a deeper level, because this is exactly what has enabled me to not only create my financial freedom, but stay financially free, and to be able to ride these big waves with joy and with fun, and to know that I'm okay, because that's really the important thing at the end of the day. And actually, I can benefit from this because I understand what's really going on. So click that link, come on in. It's a application process, so go to that page, see if that feels like a fit for you. It would be great to have you. It's a really small group, intimate group, because I'm going to be working with you, designing your portfolio, and we'll get that implemented. So fantastic, and bye for now.